Welcome to HR Insight, where I simplify human resource concepts. Today, I'm going to be breaking down a very important update around the Nigerian Tax Act 2025, which was just signed into law by President Tinubu on the 26th of June 2025. Interestingly, four key tax bills were signed into law. But the one I'm going to be delving into is the one that pertains to the total overhaul, a complete overhaul of the personal income tax, which is also known as PAYE. If you're an employee or an HR professional, this is the episode for you to watch. Let's dive in. Let's get into the key changes within the new Tax Act 2025. 1. Implementation for this new tax law is going to take effect 1st of January 2026. That's a whopping 6 months to actually do a lot of planning, changes within the HR structure, changes around your payroll, changes around the template you're using for payroll calculation. Interestingly, I'm going to be sharing one at the end of this video, so please stay till the end of this video. Also, changes in terms of your payroll software. All of these changes are 6-month window to make all of those changes. 2. Consolidated relief allowance is gone. Yes, you heard me right. In the current tax, because it's still current, because it's not taking effect until 2026, in the current tax PAYE calculation or the PAYE calculator, there is a consolidated relief allowance that is actually giving way. That is going to be giving way in the new tax law to what we call a rent relief. I'm going to get into the details of that in a minute. That is replacing the consolidated relief allowance. 4. There is now a rebranding of what we call your tax relief, as it were. It is now going to be called eligible deduction. Yes, you heard me right. This is to be able to remove a lot of confusion between the transition from the current tax calculation into the new one. So PAYE calculations are not going to be, you're not going to be having a new term called eligible deduction. And 5, the biggest change of them all is there is now a new tax table. Yes, there is now a new tax level. And interestingly, the new tax table has one key feature: simplification. 2, favoring low income earners. All of that we're going to be delving into in a bit. So what is this rent relief that is going to be taking over or replacing your consolidated relief allowance? And at this point, I'm going to be quoting from that tax bill that have been signed into law. The rent relief is defined in Section 30 of the Nigerian Tax Act 2025 as 20% of annual rent paid. Yes, you heard me right. Now, there's going to be a relief on your rent payment. 20% of your rent payment, subject to a maximum of 500,000, whichever is lower. So now, provided that individuals, employees, would now need to accurately declare the actual amount of their rent. There is an introduction of, or what I will call a rebranding of the term tax relief. They are going to be called eligible deduction in the new Tax Act, simply because they want to create simplification, not to confuse old term to the new term. And these are the usual suspects. What do I mean? The usual suspects, such as your employee pensions, 8% of your monthly emolument, which is usual suspect. That is not a contention. That is not new. National Housing Fund, that's your NHF. NHF is voluntary now, basically, which means an employee for private organization, an employee can choose to opt out of paying National Housing Fund. So that's also an eligible deduction that is eligible for tax relief before you arrive at your taxable income. And also your National Health Insurance Scheme. This is usually covered by the employer, talking about your HMO cover. But in situations whereby an employee chooses to procure are a private national health insurance scheme for themselves, then it now becomes an eligible deduction in that scenario. Four, we have your mortgage interest. This is an interesting one. It's always been there, but this new tax law is calling it out that if an employee has actually procured mortgage for the sake of ownership of their own house, it now means they can actually get an eligible deduction for tax relief on the interest paid on the mortgage. And five, we have life insurance premium or annuity. Interestingly, this has always been in the current regime, but most times employees don't want to declare that they have a life insurance on themselves or that of their spouse. But if you're able to declare as an employee, it is eligible for life insurance premium or annuity. Those are the eligible deductions, rebranded as eligible deduction, but they're actually tax relief in themselves. Nothing too fancy, but just trying to create a difference or in terms of nomenclature between the current tax law and the new one that is taking effect from the 1st of January 2026. And I'm going to be showing how this is going to change the new tax table in a bit, and I'm going to be having a link in the description where you can be able to download the new tax calculator. Yes, let's get into the new tax table. That's the biggest change in this new Nigerian Tax Act. Is this? Here you have it. I'm putting the current tax regime because currently it's still in existence, but by 2026 it's going to change. Let's take a look at the details. After you've arrived at your taxable income, taking out your rent relief, taking out all the eligible deduction, the remaining amount in your pay is called your taxable income. That is now subjected to the tax table. Before now, it is usually the first 300,000 subjected at the tax of 7%. In the new law, in the new tax act, that has been increased to a whopping 800,000 at 0%. That's interesting. What that means is that if you are a low income earner that is earning at the minimum wage, you are not going to pay any form of taxation. I'm going to be showing that in the tax table in a minute. And that is actually very considerate on the part of the federal government. It means low income earners can walk away without paying anything. In the old regime, or in the current regime as it were, you would need to pay. But now, after calculating your taxable income, the first 800,000 is 0% tax. You're not paying any tax on it. And it continues. And you will see that we now have between 0 to 25% for tax. Now, between 0 to 25% for taxation. And you see the high income earners would pay more tax than the low income earners. Let me get into Excel and I will illustrate all of this and how each of this is going to change come 1st of January 2026. This is the new tax calculator. Yes, awesome. You're going to get it. This is going to be available for download. You're going to check the video description for how you're going to download this particular Excel template, free to use. You can customize at will. I'm going to be speaking to the part that you need to customize in a bit. Yes, first part you need to customize is your pay rates. As it stands today, gross pay can be broken down at different rates. There is no law as to how it is broken down. I mean, how is it broken down into basic, housing, transport, meal, utility, wardrobe, anyone. As a matter of fact, you can have 1,001 allowances. That is left to you as an organization. But you need to define what your annual salary is, which is where you need to impute your annual salary. And I'm using an example of somebody earning 800K as an example, annual salary. This would definitely change. So as an organization, you need to change it after downloading this template and you need to customize to your organization. I'm calling out the areas where you might need to make the necessary changes. But this is for illustrative purposes, just for the sake of driving home the point of what the changes are within the current tax rate. And this is it. So, all broken down. Yes, this is where the changes are. Eligible deductions. Number one eligible deduction is your rent relief deduction. So, the first eligible deduction is rent relief. And according to the Tax Act 2025, it is going to be maximum of 500,000 or 20% of your annual rent, whichever is lower. For the sake of this illustration, I'm using the maximum amount, which is 500,000. Two is your employee pension, is an eligible deduction, and is usually 8% of your basic housing and transport. For the sake of this illustration, if your organization is doing that on the total gross pay, please make the necessary adjustment within this template. And three is your National Housing Fund, NHF, and another eligible deduction, 2.5% of gross, and it is now voluntary for private sector employees. So if you're a private sector employee, this might be empty. For the sake of this illustration, I'm putting in a value in there for NHF. And also, National Health Insurance Scheme, I mentioned, if this is paid by the employee, that is when it can be an eligible deduction within your tax table. Then your mortgage loan interest. So if you're taking a mortgage loan, the interest on the mortgage loan is an eligible deduction. For the sake of this illustration, it is empty in this example. And the life insurance premium or annuity, that is for you as an employee or your spouse. And all of that calculation is done. And you will notice after deducting all of the tax relief, eligible deduction, remember, they are tax relief here because they are tax free and they are called eligible deduction for the sake of the tax act in this scenario. After taking out of the tax relief, then we now arrive at the total taxable income out of 800,000. And you will notice there is an if statement embedded into the sheet already, so you don't need to disturb yourself. Be careful. If you break the if statement, it's not going to give you another tax. But you would see from here that this individual is having zero taxation. And PAYE tax is zero. Why? Earning 800K and below. After getting your taxable income, in this scenario, we have only 235,000. Remember, the first 800K is free in the taxable, 0%. So, since it is less than 800K, there is no tax that will be deducted. And in that scenario, you would see that for this individual, 66,000 is what the monthly pay is. And by the time I look at the net pay, it is 61,000. The only deduction here is actually employee pensions and NHF, if it is applicable to this particular employee. If not applicable, then this employee earns lesser. So this employee is going to be earning 61,000. Now, let me do a quick comparison. The new proposed, that is the new tax template that is taking effect in January 2026, and what is currently obtainable today for somebody earning 800,000. So if I look at in the current regime, this same employee earning 800K per annum at the same gross pay of 66,666 will be taking home 59,696. What are the key changes? Which means the employee will be taking up more in the proposed tax regime. That's massive. That is favoring low income earners. What do I mean? Why is there a massive change? Let's look at the taxable income in the current regime. it is 398,000. In the proposed, which is the one taking effect, there are less taxable income, 236. Knowing fully well that the first 800,000 is tax free. So this guy, low income earner, goes home without paying anything. And that is the major difference. Tax in the current regime of 2,600 in the current regime. In the new regime taking effect in January 2026, this individual will pay zero taxation. Wow, that's interesting. It seems there are a lot happening in the new tax regime taking effect in January 2026. One that is very obvious is there seems to be a lot of advantages for low income earners, and high income earners will pay more. That's the whole idea. And there seems to be simplification of the process simply because you can now earn more in your taxable income if you are able to make use of all of the eligible deductions that are tax free. I want to believe you've enjoyed today's episode. Remember to download the template before you go. I'll see you in the next episode.